A wet banana stock market is where things are like a slip and slide, right? And it's fun, and it's great, and you're on a slip and slide. So think of when you were a kid and you had a long piece of rubber or whatever, and you put water on it, you slid down it, whatever, and everyone's having fun, everyone's having a good time until there's a nail sticking up, and someone slides over the nail and dies. That was on 50 Ways to Die or whatever, 100 Ways to Die, 1,000 Ways to Die, whatever. That old Spike show, that was on there, and that is burnt into my memory. But you break your arm, whatever. That's the whole point of what I'm trying to say with the market being a wet banana market is you can make a lot of money, have a lot of fun, and it's a lot of fun until the music stops, which is what we're getting into this period of euphoria here for a lot of the bulls. And this is not me being bearish by any means, but it's a means of adjusting my risk. I have been and continue to look for some level of a pullback, but the market isn't really providing it. We're just going to keep pushing higher. There's a lot of people who are over short right now that are getting squeezed, and they will continue to get squeezed. And there will be a point in time when the music stops. It's just not right now. So instead of doing that, you want to have fun on the slip and slide. You just don't want to be the one who breaks your arm or slides too far, right? So what do I mean by that? I mean, me personally, and I'm a great example of this, as I had not the greatest time trading the indexes lately, which is typically a good bread and butter of mine. Um, I would heavily suggest you consider staying away from trading the indexes. Why? So the indexes obviously are the ones that are heavily affected by news or heavily affected by other events. If you look at the SPY, if NVIDIA moves up or moves down, that strongly influences the SPY's price, as with the Qs or any other thing, right? But if you're trading one individual name, typically, yes, the market can affect it, but it acts as more of like a headwind or a tailwind, where if the market is more bullish, it blows at the back to keep rising things up, or if it's more bearish, it blows in your face to hold you back down. It makes it harder for things to move theoretically, right? That's how I want you guys to kind of look at things and how you can be more successful in this environment, because trading the indexes, I think, are going to give you a lot of false readings, as I've personally experienced. I've had a few false readings on trying to trade this market, unfortunately. And where you would find the most success, I think, is actually charting those individual names, those individual stocks that you enjoy trading, that you see success in, or that you see potential in, that you see good technical breakouts in, good technical levels to play. That is where the opportunity is really going to be. A great one that we've been talking about on this program, and I'll just use that as an example, has been Grab, that I've been long around like $5, and there's a video on my channel about it. This was a great technical setup. It looked great on the daily, the weekly, and the monthly. Once we got this break above the trigger level, which was 552, and has now continued to the upside ever since. These are the kind of names you want to look for in the market right now that are going to give you more of an edge than playing the actual market as a whole in general, because things are going to act more like a slip and slide, a wet banana, where people are going to have fun, people are going to be making money, but if you are the one who's on the wrong side of things, you're going to break your arm, you're going to break your leg, you're going to have a bad time, and it's bound to happen to a lot of people. So that's why I say you should really be focusing on individual names right now. I think that is where the success, or where you're going to find the success, and managing your risk accordingly, knowing that. So keep that in the back of your head as you trade. I think that is where you'll find a lot more success than challenges. Whereas trading the actual market in general could cause a little bit more of an oversight, what have you, than normal, because there are more market mechanics at play. There is more aggressive delta hedging. There is more aggressive reactions with the VIX, where you may get some false positive readings, IV and IV percentile and HV percentile, fly in the face of other things that typically coincide with either a bullish or bearish environment. So there are a lot of mixed readings when you're looking specifically at the indexes, specifically at the SPY or the Qs or IWM, as it pertains to the overall market. So in conclusion, I would heavily suggest you consider trading individual names in this environment, because not only do I think your gains are going to be much better, but I think your follow through, so your technical analysis, whatever you use to trade, whether it's flow or whatever, you'll find is more accurate than trading the actual indexes right now, because there's a lot of muddiness around. So there's a lot of things that are affecting things more than they should, either which way, bullish or bearish. Where there are those underlying performers that are performing fantastically, and you don't need to expose yourself to the entire market to take advantage of that. So that's my theory on the wet banana that we're experiencing in the market, that I anticipate we're going to continue experiencing from anywhere from the next 2 to 4 weeks. What makes this month specifically interesting, as we're in our second day of our OPEX here for for October's OPEX, is we had a fantastic daily candle yesterday on October, for the first day of October's OPEX. And so far today, not much has really happened. So we'll see how the day ends. But so far we're leaning more bullish. And in general, that tends to lead towards more bullish positioning for the month of, or I should say for the OPEX month of October. Now, with that being said, you have to keep in the back of your head that the end of the month is the end of the quarter. It's the end of Q3, right? End of September. So there could be some window dressing happening as well, where this could give you a false positive. So there's a lot at play right now, and this is just one thing that I'm highlighting here for you guys. There's a lot at play right now that I'm looking at from in terms of volatility, from what I'm looking at in terms of the options chain, from what we're looking at in terms of how IV and IV percentile are moving accordingly with the underlying, specifically on the markets, that aren't aligning exactly, and it feels like almost there's something off a little bit. So that's why I'm saying you may find better opportunities trading those individual names versus the actual stock market, like SPY, Qs, or IWM, if that's something that you typically trade, as your technicals will more than likely be better. And the other thing I'll leave you with is, in general, unless you have a very high risk to reward return on bear positions right now, I would not consider bear positions. I think right now you're really betting against a steamroller the way things are moving up. There is the highest amount, and someone can fact check me on this, but I believe there's the highest amount of short interest on the Russell right now than ever in history, and the Russell right now is sitting at all-time highs. So that's not the environment you want to consider short. Obviously, people are still going to continue to short it, and yes, eventually they could be right. But if this does continue going, that just adds more and more and more and more fuel to squeeze to the upside even harder, even faster. And those are the kinds of things you want to be very cognizant of in this environment, where shorting would have to be very precise and very particular at key levels. And again, on those individual names, because I'm very strongly of the belief right now that if you are not careful, again, on the slip and slide, you're going to break your arm. You're going to have a bad time. So hopefully this helps you guys at least understand the kind of environment we're in, because it's not very common that we get into, again, this wet banana market where things are very give and take. I'm seeing a lot of people, and this is also, here's your last sign. This is what I'll leave you guys with. When there's a lot of people on social media like posting how, oh man, free money, we're doing so great. I bought these calls, the bull flow, whatever. When you see a lot of that rhetoric over and over and over, and I'm seeing a lot of it, that is my sign to be risk off. And it means in general that things are getting euphoric, where it doesn't mean I want to be a bear and just keep shorting every single day, because I'm going to get railed. That means I want to ride the wave, but cautiously. So earlier this week and this month, I was actually leaning more cautious bullish, then I went to a neutral stance, and now I'm actually more bullish. So if on a scale from like out of 100%, I'm more of like a 70-30 bull, where things are leaning cleanly more bullish, because that's just the way we're going to go right now. But personally, I'm reducing my size a bit in case, again, the music just stops one day and I'm caught with my pants down. I'm not going to lose everything, right? And that's what I would just suggest you consider with your trading going forward into October OPEX.